journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, Apple released their earnings yesterday, and they were originally thought to be poor, and you can see the market sold off $12. It stopped exactly at the 382. If you think these guys in New York don't know these numbers, folks, there it was, rallied $24, and then it's come down. There was your first 382 retracement right there early this morning. We've got a second one going right now in Apple. Now we're going to switch over to the automobile business, and we're going to take a look at Carvana. If you want a stock that likes to swing, oh dear, I keep watching this S&P. Here's Carvana on a weekly basis, folks. It goes from 400 down to what, $6 a share, and then from $6 up to this level right here. I don't know. I know what they do. They buy cars. When you see that lady saying, "Oh, look at this great deal," here, sell your car to them. Well, let me tell you, folks, it's about 60% under what any dealer would give you. That's how they make their money. There's the ABCD on this. I imagine it extends up, but here's where we are on a daily basis. You'll see it doesn't look quite that good. Just spread it out here just a second. There's where we hit over the last few days. We had a big, you see this big island reversal, folks? That's what's happening in the stock market right now. That's it right there. That is an island reversal. And I just showed it to you, and I don't know if it's going to happen or not. As long as that S&P doesn't close below 68.38, it's at 68.50 right now. You want to see it above 68.38, then it'll gap down. Then look at this. There's your 382 retracement here. A perfect one. This is a perfect roadmap of what the, what do I know? Anyway, there's your 382. And look, another gap to the down. This is what's coming, folks. So get ready. I don't know. I get off my soapbox once in a while. Anyway, you know what, folks? The news is so gosh darn bullish for Meta, and they get 25 billion or 190 billion, whatever it is, and the stock collapses. Come on. There's something wrong. These guys aren't stupid. All right, let's get this out of the way here. And we'll move over here to the crude oil. It's been very good to us, as have the bonds and the euro. In fact, we got a lot to go on the euro here. Now, we just made we had the 382. We completed an ABCD pattern up here in the crude oil. So I'd be really careful being long much from here, because we've completed that ABCD almost exactly at the 618 coming into a weekend. I think I would rather be flat than have a position. The bonds, they continue to go lower. As you can see, they're continuing to go lower, and I think we're going to be going lower for quite a while. Now we have to move over to where the pedal meets the metal, folks, and that is in the currency markets. We're going to start out here with the U.S. dollar index, okay? And we're going to go to the pound that we looked at yesterday, because here's where we are. I'm going to move this up like this so you can see everything really nice and clear. You can see the pattern that we have going on right now here in the dollar index. I'm going to bring this up here and set it right there. We're going to go back to our high way back in May. Remember, that was a major high, right? You bring that major high down, and look where it is, folks. We're setting right there at the 618. 1, 2, 3, 4 days up, a butterfly pattern. There should be some resistance coming in here to the U.S. dollar right now. So far, the high today was 99.68. It's at 99.61. All right, now let's go back to our memory bank. And if you remember, we had the British pound yesterday that we were looking at very, very closely. So we're going to look at it even more closely today. We're going to get the daily chart up so we can all see it. And there was the ABCD pattern that we wanted to hit, and it hit the exact number. The exact number, folks. Not 2 or 3 pips off. It hit the exact number. It's rallied a little bit, as you can see, on a very short-term basis. It's had a little bit of a rally, and that's all that means. But whether it means anything or not, I'm just saying these things are lining up. And when they line up like this, and there's all these things going on in the world, all it takes is one little shaking of the tree, and look out, all the apples will come down. You know, if you remember back in 1987, on October the 18th, Secretary Treasury Baker came out of a Japanese meeting and he said, well, I didn't like the way this thing turned out. And we opened 500 points lower in the Dow Jones and ended up being down 1,600 points in one day. Anyway, there's where we are here with the euro. You can see we've completed these patterns also. You can see, in fact, it's up just a little bit from that level. There's that 786 on the euro. That would be, you know, folks, this might gap down, and this, I could be totally wrong. I'm just looking at these numbers and the fact that they're holding at these levels and giving you some ideas. That's all. Well, that's all I can do, because I just know ABCD. That's what I look at, and that's what I try to look at. So those are the major ones that we're watching here, because they're at a real critical level, especially with that dollar index. And the dollar index is a whole bunch of others. Now we're looking at this S&P here. I want to show you here, because this key number that we're looking at is 38. I'm going to get this up on the hourly so you'll be able to see it. Because then I think this is where, so you see, oh dear God, we're almost there. We ain't going to make it. Shut the front door and raise the rent. See, there's the Sunday night gap, all right? There's what we did so far. Today's rally, we rallied up to a 61% retracement here. And you can see here, it's not going to make it, folks. This is going to, this gap is going to be filled. We're only 8 points away, 10 points away with a half a day to go. Give me a break. It's still going to be reversal, but it's not going to be the island reversal that I wanted. And you know what I want and what I get sometimes is a little different. Let's take a look here at the cash S&P. It may make it, but I doubt it. Let's just get this up and we'll take a quick look at it on the weekly. And there's the daily. I can show you how the daily looks. I got to switch over to the 4 hour. You'll see here we're already, this is where it's got to get to, folks. So it still has a chance, as long as we can see. There's your Sunday gap right there. That's your Sunday gap right there. We're still there, so this could still do it, because the cash is a little stronger than the futures. But the futures, they're going to fill it most probably. And then looking at this on the long-term weekly, this is what you're staring at, folks. You remember that Carvana that chart I just showed you in Carvana? That's the same pattern. You want to get long up there, boys and girls? Hello, operator. Let's do a bed check on that one. No, sir. Don't want to mess with that one. Okay, a couple other things that we need to remind you of, and these are things that we talked about over the last couple days. I want to get up here and show you this NASDAQ, because boy, look at this thing. It's just, it's really coming down now. Hold on one second here. There's where we were this morning. We had a little bit of a rally here. As you can see here, we're going to come back and do the same thing on the hourly chart. But you can see this would easily be an island on this one, because the island over here, whoa, my goodness. Let's do hourly so we can see what the heck we're doing at, Larry. All right, there could see a little better. There's our gap, okay? Now see, here's our gap. So we have to get, I don't think it's going to make that. But if the NASDAQ were to do this, close at 25,700, down 200 more points, which would make a, hold on, we'll see. We'll make an 8. This is really a rare pattern, folks. That's why I'm spending some time the last 2 days, because I've been...
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, the Dow Jones just hit the low or the high that we made back on Friday, the 25th. And then you can see here the 24th, and then there was the high. You see, we just hit it just now. Maybe this will hold it. I hope it will, but we'll have to wait and see. But it is completed. So the Russell has already broken it. We matched it here, so there's no island in the Dow Jones for sure. So that's it. There was the 382 this morning. So, and right now it's holding. So it's hopefully that's not a very good word, but we're going to keep using it for a while anyway. All right, let's move over to the gold market here. Hold on one second, and we will get this ready here for you. Our gold, we were looking for the gold. Let's get the hourly up because that's what this is the hourly, but let me get it so that I can show you what we were waiting to see. We wanted to see this ABCD pattern to complete right here. And as you can see, it did not. It missed it by quite a bit. Let's just draw it in so you can see it. Missed it by about $8, I believe. Let's see where we were. We wanted to get there to 64. We only got up to 60, so it missed it by $4, and now we backed off a little. I still think we could possibly get there, but that was a little disappointing. We didn't get filled. Yet another one right in here. If you'd have watched it early morning from yesterday's move right there, you could have seen that. That was a nice little Gartley pattern at the 786. I was busy doing things other than that, and there it is right there. And so that's it. The gold still looks berries, folks. I mean, this is remember on this long-term pattern that we looked at, there was a lot of, this is that bad weekly chart. There's the Dow Jones going below it again, so we don't have to worry too much about that. But there was, remember that number, we went through that many times up there at 43.90. The high was 43.98. And that never got any higher than that. And now we've come down. But you can see here, this is a daily chart. Okay, now let me turn this thing off on the Dow Jones, folks. Otherwise, it's going to keep beeping forever. All right, it's off now. Should be anyway. But here's where we are now with the. See, there's an ABCD. Now, I don't think if this is a 382, I'm going to shoot myself in the foot. Oh, no, thank God it isn't. No, that would have come in at 40.92, and this only got to 40.60, so that missed that by quite a bit. But that's a small ABCD that should have got to 64. it only got to 60. So that's it. If we look at the silver market, we'll see what's going on with silver, because it's been acting okay, but it made the 382, whereas the gold did not. Let's get up here on the silver, comes in right there, and we'll do the hourly. We'll be able to see it make it 382. And there it is right there. You can see the 382 it made yesterday. Got too many lines on here, but you can see the 382. There's your move. There's your 382 from the high. Let's clean it out, Larry. Come on, give me a break. There you go. There's your high right here. Comes in. There was your 382 yesterday here at 865. It's about 50 cents under that right now, but it held that and started up. But you see, it's acting a little better than the gold is, actually. So that may or may not mean anything. All I do know, folks, if silver ever closes above $60 an ounce, it'll go to $100 an ounce. I really, really believe that. And I believe a lot of other things maybe never come true. Like I just figured out the other day that Santa Claus wasn't really going to be coming around anymore. Okay, we've covered that. Let's move on to the weekly on that. We've covered the euro. Oh, we have to go back and we have to cover the Canadian dollar, because we've been watching that for quite some time. And we want to follow. These are the positions that we've been talking about on the videos that I send out, and also on the daily shows. Here it is right here. Let's see how we're doing today. I don't always look at these each day, but it's had a pretty good rally here. That's good, because there was our move here. Let's get the daily up. You'll see here. Yeah, they're stopped right at the 382, and they're having a pretty good rally. So there was a number we're looking at, and it looks like we're right about the. Just look at this, right about the 618 right now, a little above it right now. So there's where we are. There's going to be, if there's going to be any fireworks, folks, it'll be in everything. But the main one will be in the foreign exchange markets and the gold and stuff. Those react very, very quickly and without any trepidation at all. Okay, now let's move on here to here's our S&P. We're almost ready to cash that one out. Yeah, there we are. See, we're not going to make that one. That's not going to be see, we're right there. There's where we are right now. There's our high on Friday. Okay, there's when we gapped up on Sunday. Everybody that bought this here for the last 5 days, that's why it's called the weekly reversal, folks. That's why it's called a weekly reversal. Remember that chart on Carvana that we looked at? You're looking at the same thing happening right here. And so that's why you want to be really careful being long coming in over the weekend. You got wonderful news everywhere. We know that the artificial intelligence, they're putting more money in that than they did with the when the Knights Templar were looking for that. What was that thing that they're looking at in Israel all the time? Oh my gosh, I'm going to lose my mind on this one. Oh, that's terrible. Senior moment. Let's move on. What was that thing with the golden eagles and everything? Oh, I watch that stuff all the time. I can't even remember. It's a mental breakdown, folks. Let's move on here and get on to the second thing. It'll come to me in about 10 seconds later than when I get off the show. Let's get back to this NASDAQ, because it still has a chance to do the island reversal. And believe me, it's got a pretty good chance. You can see what we've done here. There's where we were Sunday. So if it closes, you'd like to. So it's at 20. It's 5,900. We've given up 400. Well, so today, from yesterday and today, we've got up 500 points. Okay, and we're only down. And we haven't even taken out the lows of yesterday yet, but we've done that and everything else. So if we can close right here, 2568, down another 300 or 400 points, that's still going to be an island, okay? So that when you looked at this on the weekly basis, you'll see that the island is still there. I'm going to show it to you right there. The island would still be there as long as we close like this. You see, it's still got to go a long way to even make it look like a bad pattern. I mean, it's beginning to look like one, like everything else, but so far hasn't done that. That's why you want to pay attention. It has nothing to do with astrology, none of that stuff, folks. It's just, markets go up and make certain patterns, and that's all I'm looking at. If you remember, when I did this pattern, you see the ABCD measured at 26,161, and we got to 26,399. That's how high we got, 26,399. We're 300, 400 points under that right now in just one day. So if we can close below here, say at around 56, it would still make that island. And you can see, folks, let me try to remind you of something. You see how fast markets go up? How do you think they come down? They come down a lot faster than they go up. So who knows what would cause it, but, there's so many things out there that could cause it. We'll have to wait and see. Well, we just got a little bounce off the old S&P. God love it. It went down there and didn't quite make it. See that? It's 38's the number. 68.38. I put that in that report that I did earlier last night and today. I talked to you about. Let me write that in there because that's the important number right there. 68.38. I'd like to see it close right above that. Right about here is where I'd like to see it close. Not up here, but up here. That's where I'd like to see it. We took out that low, didn't go anywhere. So this is the key number because that's that low right there. That's why it's interesting. May we live in interesting times is the old thing. I think we have a break coming up here in just a second. Let me get you.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, this is the pound and the euro. I'm looking at it together. You can see here that we've completed the pattern here exactly in the pound. We're almost there in the euro within a heartbeat of getting that number also filled in here. Now, remember, longer term, long term, I'm really, really super bearish this, because that's what I'm looking at longer term. But right now, I think it could bottom in here. So it's a monthly chart, and we're going to go down to a daily chart. So that's like comparing, hand grenades and cookies. This doesn't work, because this is, I think we could get a rally coming from this level. That's all I'm looking at. And when I look at the U.S. dollar, the same thing. Now, if this closes sharply below this number down in here, below this number down in here, then I have my choice of re-entering the short or wait. And folks, I believe in ABCD, so that's what I work on. I don't try to think about what the hell's going on, because I don't understand it. And I appreciate everybody telling me why the bonds are doing all that stuff, because it makes great sense, but I just look at the charts. That's all I know. I can't do anything more than that, because that's what I've trained my mind to do. I don't watch the news, don't care about the news, and that's why I try to do little by little, and it works pretty good most of the time. Sometimes it doesn't, but other times it does. All right. Now, remember, I want to show you mistakes that I make too, because remember how bullish I was on my favorite trade, which was the soybean meal. This makes me sad, but I'm still happy because people made a lot more than I did on it. Here's where we are here. Look at that December soybean meal. Every day I look at it and I said, oh, dear, please, what did I do wrong on this one? You can see here's where it is for now, folks. It is $4,000. $4,000. We bought it here at 72. I got out of it right there at 02. And here it is, another $2,000 higher, now above the 786 of this move right here. I had a choice of putting a trailing stop in, and this was before they announced there was going to be any soybean deals with the Chinese, but that's the way it goes. There's nothing else you can do about it. Now, if you remember, another one that we've been waiting on for quite some time is still acting like it's going to get there, and that is the December soybean oil, because I saw it just a little while ago, and it's still coming down. Now, this is going to be a great opportunity, folks. Because remember, when you squeeze a soybean or crush it, squeeze it, hello operator, you get 80% is meal, which is pure protein, and the rest of it is oil. Okay, now the reason why this soybean exists is because Henry Ford back in 1900 went to China and found this little plant that had a lot of oil in it, because he could make his cars red, white, and blue and not just black, because they didn't have enough lacquer to paint that many black cars. So that's how we got the colors that we have in there now. So this is the key level to watch, is this 50% retracement right here, and then also this level right here. So these are the levels that we're watching. Now remember, the soybean meal is going straight up, and soybean oil is going straight down, because they want the meal. They're crushing for the meal, not the oil. So they're getting rid of the oil at a cheap price, and they're making them pay up for the protein. Do you remember what I said with the wheat? I said they're not going to stop eating pizza, bread, and pasta. Well, this still had a move, but not like the rest of them. But it's coming, because these things are going to be more interesting for people to buy, whether it's going to be related to the dollar or anything like that. All I know is just we made major bottoms in some of these folks, and that's why we were looking at those bottoms. Now, these are shorter term patterns, of course, but that's what we're watching as we walk through these things as we see them each day. Okay, let's get back to this. I'm really interested here in the S&P, folks, because I really would like to see it hold this level right here, close right there. That would make me very happy, but I don't think it's going to do that, because they're just not. They never do what I want it to do anyway. So let's move on here, and we'll get up to the next one here that I want to cover, and that's the wheat. And because the wheat has more potential, we're going to be following it very closely for a pullback here in the wheat. Let's get this up here and put the daily up. Here it is right here. And we'll get this here on the daily. And you'll see we've had a pretty nice move. And in fact, it backed off a little bit today. I think it probably made a 382. Let's just double check. See if that old 382 came in for us today. Yep, it sure did. Here's your low right here. There's your high, and the pullback today was bada bing, bada boom, right there at 19. It's now up $600. There was your gap right in here. There's your pullback right there. I missed that one, and just can't do them all. But that's what I try to talk to you about that. because when you see these types of moves, you've got to get ready for them, because that 382 is going to be it's going to be big. I've got some plans here and a little dissertation here on this thing a little bit. I've done a lot of homework on this over the past few years as I get more and more interested in it. And I saw a few things that will help as far as the number of bars up and where it comes out of point C. All those things are important to 382. And when you add it together, it really makes it, and it explains the ABCD pattern better than ABCD itself. I mean, it just really does. I think I have an example of that here. Did I save that example? Yep. No, I don't think I did. Let me double check here. Yes, this is the gold right here. You see on this gold chart right here how you've got a 61% retracement here, but you've also got the 382 retracement here. This takes precedent. This is what's going to take it up to that. Well, in fact, that's why it went up to 4064. It was because of that. And the same thing is true here. You see how you have the lower low here, but there's your 382 right here, and that's what makes it get to there. See, and it really does fit together when you put them together. But you've got to look at them both, because when they hit, oh dear. They're really good, and you don't have to wait around to see if you're going to be wrong or not, because you'll be stopped out of it long before anything else happens. Let's see how we're doing with the old clock on the wall. Oh, a minute and 30 seconds. We got a chance to look. We've looked at Apple. Now we're going to take a look at Tesla. I don't know what it's doing today, but we'll take a quick look at that one, and then we'll have to look at NVIDIA. Where's Tesla? Tesla starts with a TS. There it is right there. How are we doing with Tesla today? It's doing nothing. Had a little bit of a higher high, and it hasn't really reacted very much at all. And we'll look at NVIDIA next here, and get up here 1 second. NVIDIA is with an N, I think. Yeah, that'll be right up here. And we'll see, it's probably still around 210 or something. 202. Let's look at that on the... That's a daily. Let's look at this on a little bit smaller time frame. That's a daily. Well, let's look at it on a 4 hour then. How about that? Yeah, we got up to 412. Then we came back and filled a little gap in here, and this is doing nothing right now. This thing could still go up, and the rest of the market could go down, folks. Remember, that's easy for that to happen, because it's a market of stocks, not a stock market. And that's what we have to be really focusing on as we're looking at these here today. And I could be wrong on all of this, that's for sure. Been wrong many times. Like I say, often wrong, but never in doubt. All right, I think take a break. We'll be right back and show you some more charts on some currencies.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is the cash S&P. There's where we were last Sunday, okay? There was the gap up on Sunday. I remember I reported that it looked like it was going to gap up. And I said, God, stand aside. There was what I was looking at right there. There was the high. I thought that could have possibly been the high. And then when I saw what was happening with Bitcoin, I knew that that was not going to happen. So we had this pattern happening right here. And as you can see with that big gap that we had, you had to add the 1.27 filter in there because the CD leg is going to be so much stronger, taking it to 127. And there it took it right up there to the high. The good part is, folks, this can leave the island, and I'll tell you why. You see how far that distance is right there? That means that this thing would really have to collapse, and you can see where it is right now. It's holding up actually pretty well. It's still holding up above the lows of the day, so that still could leave. I like to see it close right in here on the cash, maybe at 79 or something like that. Then you could see the island happen. And remember, when these markets break, you can see how quickly they break. This was, for the October 8th, in 2 days, it dropped. Remember, we dropped 150 handles in the S&P. Okay, you can see we could easily do that. And but folks, here start mumbling, Pesavento, you bozo. Here's the problem. Money, margin, okay? Margin's really great when it goes up like this, but boy, oh boy, there's where you got to be careful, okay? This is like we've never seen before. We're $1.2 trillion in margin. I've never seen numbers like that. And the other thing that you have to remember from our good friend Jeff Hughes, look at the percentage we're up in speculation, 2,486%. Tech bubble, 800%. The commodities back in 79 and 80 in gold. Remember, gold at 80 in 1980, up 1,200%. This was the Nifty 50 back in the 50s, 600%. This was the tech bubble, and look at this. There's the tech bubble right here. Market gave back 80%. How much is it going to give back here, folks? Just a 382 on this will make you rich. But, make somebody else poor, but, who knows? I don't know if it's going to happen. Oh, I know it's going to happen. Maybe not in my lifetime. So that's the key. But at least we're looking for it. And that's the main thing that we're watching as we go through looking at this. So this still has a chance to do something. Now, that's delayed data. So I don't know how we're doing here. But this is the NASDAQ. You can see we've come down quite a bit. There was the low yesterday, then we had the big rally, and now we're right in this area right here. So not much happening. Let's check that stop and P one more time. I think it's going to hold there. At least it looks like it wants to, which I would be happy if it did. and then we'll move on to the next one here to make sure we cover. Yeah, here it is. It's doing okay. It's back up another $12. See, it's like to see it close just right about in here, any place right around in here. 638 is the key. I don't want it to get below that because, well, it wouldn't make any difference because the cash is going to make it, is going to make the number, and it doesn't make any difference because cash is going to do it, and cash is that's the ETF. That is going to do it. It ain't going to take. It's not going to take that thing out. That was yesterday's low. I don't see how it's going to do that, but it could. Then it would negate it would make the island reversal wrong, okay? And it would at least still leave the hanging man. Let's look at the weekly because you can see the hanging man. There it is. There's your hanging man right there. See how it is right now? It's close. You see that hanging man means everybody that's bought it the whole week not doing good. That's the same thing we saw in Carvana. Thanks a lot, Sean, for asking about that chart because that makes it a lot easier for me to explain some of these things here. All right, someone's asked me about the bond market and related to the note market. So I'll try to answer the question. I don't trade the notes. I watch them, but I trade the bonds, always have. The Treasury notes are right here. So what we're going to do now is we're going to make sure we get into the daily. They've been going down just like the rest. Maximum warning. I'm using too many charts here. All right, let's go refresh this. And we'll see where we are. Okay, now we've come down here and we're coming into some pretty strong support. We're right at the 786. There's where we are. I believe we hit it right here several days in a row. So there's some pretty good support right in here. And in fact is if the market does get really bad and there's a flight to quality, you could get a little bit of a rally here in the notes and also in the Treasury bonds. But the key right now is to watch the close today in the currencies and also in the stock market and stuff, because that could be the real key, because the news is so bullish, folks. I mean, you see all this stuff that's been going on. And now, stocks like Meta and some of these others and Oracle, in tremendous amount of, but let's look at Oracle. Remember the guy made $100 billion in one day, Larry Ellison? Let's see how that $100 billion is acting right now. You can eat out a couple nights a week on $100 billion, folks. Honest to God, you can't. Well, unless you eat in California, then you can't. Okay, here's where we are. Oracle, let's get the daily up. And look, it's still going down. Pretty soon he's not going to have any money left from his $100 billion, because there was his $100 billion. He's given back. He's only got about 30 billion now from $100 billion, and it's probably a buy because look, there's AB equals CD, AB equal CD. So look for a buy in Oracle. Maybe this is going to be it. Who knows? Anyway, there's where he made the 100, and you can see he gave more than that back. So he gave probably 200. He probably gave 800 billion back out of the 100 billion that he made. So maybe he's not going to be eating out. He has a home in Tucson, folks, 25,000 square feet right on top of the mountain. He's never lived in it. I know the lady that does the cleaning on it, and she does our house. A totally different house, believe me. And anyway, that's she goes for once a month to make sure everything's done. They have gardeners and everything. He's never spent a day there as far as she knows. Okay, let's move on here. How much time? We got another minute to go. One more stock that people have asked me about. Palantir. 1 second. There it is right here. Hold on. This is John Jameson's favorite stock, folks. He loves this. He says this is the NVIDIA of the futures, and you can see it's still going up. Look at this, another up move today, still going higher. There's another little island right here. You can see that could be an island. See, this could have been an island too, but it didn't. The island didn't happen. You have a gap here. But anyway, that's can you stop and think of that? That's got to be really some kind of move because of the fact that, wow, that is really something. John got out of this at 145, I think, and he was happy. Heck, he bought it at 25. So what the heck? What are you going to do? There's your ABCD leg right here, and we measured up to right about there, 206. You might got there. We got to 204, and 206 would have been the number, so who knows? But that's what we're looking at here with Palantir. Do we have time for one more? No, we don't. We'll be right back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the S&P. So far, we've held that gap that we talked about right here. We'd like to see it close at 68.43. Or higher. That's where I'd like to see it close. And if it doesn't leave the gap here, it doesn't really mean very much. It's still a hanging man, and that's very dangerous enough. That means that everybody that bought it for the whole week has lost money. And then when you see things like happened to Palantir, Meta, which is, I don't understand that stuff anyway. Anyway, they're just wild action. So this is what you expected. Everybody knows that the artificial intelligence is going to be the greatest thing ever. As a matter of fact, I'm coming out with my own artificial intelligence group. So please send your money to GoFundMe.com with my name, Larry Pesavento, and we'll put the money to work for you, and I'll let you know how it works in a couple of years. I can't guarantee anything, but we'll do our best. Well, that's all I can tell you today, folks, but pay attention to where it closes today, because it'll be in the newsletter, and then we'll be prepared Monday. And believe me, there could be some type of a shock out there. And believe me, if you don't think there's enough out there to cause a shock, you don't watch the news. And I don't watch the news. I just hear about it from other people. So it's going to be interesting. We do live in interesting times, and I can almost say it's going to be in November that we're all going to remember. So remember, on the 4th of November, there's going to be election, the 4th or 5th, but that is the anniversary date of the low of the stock market in November of 1929. October 28th was the big crash, but it went down another 10 days into November the 8th. And from November the 8th, it rallied for 4 months into April the 1st. And then what happened? It went down for 2.5 years, from 383 in the Dow down to 42 on July the 8th of 1932. So live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side on Monday.